Alrighty. Doc here from North America. Good morning, good afternoon, and it is good evening somewhere. Let's see what's going on today. What do we have up there? Let's switch it over to, I think I'm looking at, what is that? That's the natural gas. We've moved over to the October contract. No, I'm sorry, November contract there. Let's go over to the Swiss. There it is right there. Um, Interesting. It's breaking the top of the range here. I guess it's going to go back to these black. We're convinced that this particular channel is the channel that the Treasury, the U.S. Treasury, pays attention to. That's why we put it on there a couple years ago. We thought we kind of identified a channel or a envelope of what they wanted to see the currencies trade at, every individual currency. And we put it in on the Swiss because we thought, well, the Swiss is kind of like a go-to or place to run to when you have concerns about the dollar, more than any of the other particular currencies. We're seeing nowadays British pounds becoming a safe haven also. That's kind of interesting there. Let's get the chat line up just in case anybody has anything to ask about. And so you can see there this morning, you check it out first on J4X right there. You can see that the Hinky Ashy is ripping to the roof. You can see the white line has pierced a couple days ago. And you can see we're already up into the 92s. Whereas at the beginning of last week, we were flirting with, what were we flirting with? We got down to as low as 90.18. And now we are beyond, we're two full handles up. There's a couple different products or situations or ideas, or you can throw a couple different things at it. But one thing is for sure, inflation has to be some type of fear. What else has to be some type of fear? That it's bad enough that you could say that Richard Nixon unpegged the dollar from gold, and being the world reserve currency at the time, I think it was Charles de Gaulle that scared Nixon. He said something like, I think I'll start exercising my dollars into gold. And Nixon was like, oh, no, you won't. We'll unpeg that thing. And they did. They unpegged it. That was Bretton Woods. And with it, really what it hurt is for the United States, it didn't hurt us too much because we are an island. I think it was best said, at the beginning of World War II, they said that basically America was an island. It was a land of a sleeping giant. Leave it alone. Don't bother it. It won't bother you. That type of attitude. And I think you can see that governments of the world, different governments, socialist, communist, and just governments in general, if they're fiscally responsible, they don't have any problem. But if they're not fiscally responsible, then what happens is that they build more debt and more debt and more debt, and they get in more trouble. And that's what they did. They basically, so in other words, as much as we have the number of debt, the number that our debt is in the United States, how ugly it is, how big it is, it takes, 20 countries to equal it. The problem is that it's a small percentage still of our every year amount of gross spending. And so it's not as death-defying. We talk about 2-to-1 ratios and 3-to-1 ratios, whereas something like Japan is 250 to 1. China is something like 500 to 1. In other words, their debt level is so enormous compared to what they generate. And I guess it goes under that characteristic, if you have enough money, you can buy your way out of problems. It's not always true, but at least if you have the capital, you're able to slow it down, you're able to manipulate it, you're able to massage it, it works that way. And so what we're seeing now is, I think, we saw yesterday, we're going to go from the Swiss real quick over to gold. Let's just take a look at that. Let's see right there. We're going to throw gold up there. And I saw an interesting headline. It said, let me see if I can find that headline again. It was a really interesting headline about gold, and I kind of agreed with it to a great extent. I thought it was a very insightful type of headline. Gold is now technically toast. Basically, I think that is true. We saw the cryptos yesterday. and the last couple of days, we've been in daily buy as you, oh, where's a fact check spreadsheet? You can see it on there. But this all ties into the currencies. You know, everything we're talking about here ties into the currencies. And there's the fact check spreadsheet. And let's slide that. Whoop, where'd it go? Where'd you go? Where's the fact check spreadsheet? I just had that. There it is again. There you go. All right, and as you can see, it needs to be moved over just a little bit. Oop, there we are. Right there. And as you can see, going down to Bitcoin, we're 2 weeks in a weekly buy. Whoa, let's hope I didn't move that over there. It's being a little antsy there this morning. Yes, it is, isn't it? So I'll move that back over again. Somehow I don't know. Alright. Bit future. Let's just put it in there like that. We'll just spell that again. And bit, not nit, bit. And this all ties together with the currencies. Bit, like in B. Bit, F-U-T. Okay? And there's the bit future. And I think we'll leave where it says Bitcoin. We'll leave it like that. So we've been 2 weeks in a buy and 4 days in a buy, okay? You know, you can see on the chart, see where we are. Okay, and let's put up gold real quick. Now, you can see gold dropping like a rock, Bitcoin going up in value. I think we can find Bitcoin on here too. Right there, was it that is the August contract right there. And you can see it's been climbing, you know, and that's why that headline I thought was very fascinating. Gold is toast right now, and I think it is. I think it really is. You know, we talk about it here. You know, we get really up to the edge. We keep on thinking, oh my God, like last week, you know, Robin, 2 weeks ago, we were all looking for the weekly buy in the metals complex. This all ties into the currencies. The currencies are being held in as, you know, like envelopes or a zone or a channel, however you want to describe it. Now let's go back to the Swiss again. So the Swiss is basically put in some type of, they have the U.S. Treasury puts out a report every quarter about who, I know this is the biggest laugh you're going to ever get, who is manipulating on their currency and who is not. Good Lord. With the way that the QE is manipulation. So, I mean, why would they even come up with a goofy idea like that? But, don't start me on that one. All right, so let's go over to Chicago Quant again and look at the channel. You can see it right here with the two big black lines. In fact, I guess we should even emphasize it like with like red dotted lines or something like that. I mean, make it really clear that this is something unique. And that's the channel that we thought we identified that the Federal Reserve or the U.S. Treasury was aiming at in this particular product a couple years ago. Because you can see, okay, let's say okay, and then we go back, and you see it just plays that channel. You know, it gets out of it a little bit, gets straightened out. I'm sure, you know, it's end of the, like right there, that's the end of the year. So, yeah, all right, you know, they probably have to do settlements, you know, that type of thing. But overall, they've identified channels. And before that, it was another channel above it for a couple of years. And, you know, this has been going on since the creation of QE. Now, we go back to that earlier statement I was making, and that is that, you know, the unpegging of the dollar by Mr. Nixon back in the late 60s, because Charles de Gaulle, President de Gaulle of France, said, I'm going to exercise my dollars, because that's how it used to be. When you had a dollar in your hand, it didn't matter if you were in Chicago or Philadelphia or Tokyo or Paris, it didn't matter where you were. If you had a dollar in your hand, you could send it to the Treasury, and they had to deliver $1 worth of gold. Okay, and if you had a $10 bill, they had to deliver $10 worth of gold. And so Charles de Gaulle had said something to Richard Nixon, and Richard Nixon went into a total, yeah, I don't know, you know, there's a lot of things you can say about Richard Nixon. I mean, he's a colorful character as a president, you know. But one thing is for sure, he was a thinker. He was always a thinker, okay? And when he heard that, he thought, I guess he started to extrapolate, and he started to think. Remember, he was the one who put the tape recordings in the White House. He wanted for posterity, for them to be able to listen to a president talk all day long about different issues, and they would get rid of the top security parts, and historians would be able to listen to President Nixon talk about different issues with his cabinet and so forth, like a candid camera type thing, So Nixon drops the connection between gold and the dollar, and and now there are people talking and they're thinking about this, 50 years later. I guess it was in the 60s, right? So 70s is 10 years, and the 80s is 20, and the 90s is 30s, and then the evens are 40s, and now we're in the 50s. And I guess if 66, which would be 68 would be 32 years and 21 years, so 53 years since they've dropped that connection. We see the world enormously in debt. Enormously. In other words, irresponsible countries have spent more money than they can generate, whereas in the United States, up until Obama, we were under one. We were under one ratio. Our debt equaled 1 year's gross domestic product. That's right. 1 year of gross domestic product equaled our debt. That was not bad. Now I think we're under 3 at this point. Whereas you take a look at Japan, it's like 250. Like I said, you look at China, it's like 500. And you look at Europe, I think it's like 175. You look at Greece, it was like 200. Their gross domestic product to their debt. And so gross domestic product basically shows the amount of gross income to a country. And then not a profit, because then you have to subtract your debt versus your earnings or type of thing, and obviously it's always at a little minus there. But in the case of the United States, it's still not that outrageous. And at the same time, someone probably would say, okay, so what's that got to do with, even if it's so enormous, aren't you in trouble? It's like, no, because if we closed our doors tomorrow, we pretty much are going to still be the same. In other words, we've got 300 million people plus, and we're constantly evolving. That's the freedom. Now, obviously, they're trying to pass a bill today. That could have some effect on the markets. They're trying to move towards socialism again. They're always trying to move towards socialism in this country. And they're really, Trump proved one point. You can wipe it out in a matter of a couple years. He did. He pushed that socialism out the door, and, the country exploded. We had unemployment numbers that had never been seen by African Americans and Asian Americans and Spanish Americans. It caught up to the same unemployment as the white Americans. It was, it was a evener. It leveled things off. Hence, they had to steal the election for that reason, because, he's proving that a professional politician is a disaster. Anyway, here we are. We're looking at the channel of the Swiss, and you can see that we're moving back up to the top end of its range. All that stuff. You can see our math picks it up pretty much almost instantly when it starts. You get a daily buy here, and as it keeps on confirming every day, we stay in daily buys. And that's where we are. Line 21. You can see we're four full days now. We're on the 5th day as we speak of being in a buy, and it just keeps on climbing. And at the same time, we have Jackson Hole going to happen. For some of you out there, Jackson Hole is where all the central bankers and the billionaires and big money managers all show up in the middle of August, and the Federal Reserve Chairman talks to them personally, one-to-one, and so forth. It happens every year, Jackson Hole. I almost went out there one time. I hate being around those people. But in the end result is that, this is where we're at now. You can see that. And at the same time, there's some question marks starting to kick out. Like, what was Nixon like I saw on Bloomberg today? I don't look at Bloomberg, but my friend looks at Bloomberg. Friends of mine do. The old guys from the trading floors, the old chairmans and so forth, look at that stuff still. And then they send it to me and they go, can you interpret this now for us? Remember, I was the kid. I'm 66 years old. I was the kid down on the trading floors. That's what I was. I was the kid, I was a young guy. And so, they come to me and they go, Mar, what's this mean? How do you interpret this? And then I got to type something out, text something over to them. Thank goodness they can figure out how to use text. And end result is that, that is what's being talked about today about Bretton Woods and the dollar being freed from being liable for delivering gold. And when you look at it 53 years later, what a brilliant move it was, really. Nixon really did did a lot of smart things, Nixon. He did a lot of interesting stuff. And you got to imagine, he only had 105 or something like that Republicans in the House of Representatives. The rest was all Democrats back then. So he was able to work his magic in different ways, get policies changed, so forth and so on. But there you go. That's the Swiss. That's where it's going, and we're in a world now of not real physical trust. You try to buy gold, you try to buy silver, thinking that inflation is coming. There's uncertainty about economics, so forth and so on. And what do you get out of it? In the end result is that you get a lot of platitudes and a lot of talk, but not a lot of action. All right, let's jump over to the euro now. And what's really, we've talked about this for a couple of weeks now. We've even made them titles of some of our webinars. The euro is definitely showing lots of weakness, more weakness than we would expect out of this whole situation. It's been falling. This is what, the 6th day or 5th day or something like that. This is going on the 6th day on the daily sell right there. Let's see how it looks on J4X. Probably looks like one big steep red waterfall. Right there. Woohoo! Look at that big bar down. Let's see how it works. And yeah, the red waterfall. And you can see the white line pierced it at the same time. You can see, using the J4X, when you don't have Doc around, you can throw this little system up on the J4X and it gives you a general idea of where things are. Remember, it's about a 4 to 6 hour behind our math, but at least it gives you a general idea. If you want to see where it is at like 3 in the afternoon or say midnight your time and the markets are closed and so forth, it gives you a great opportunity there just to understand what the trend is. Maybe break it down into an hourly or something like that. It probably gives you a little bit better insight. Not much, but it gives you somewhat better insight. And that's where we are at the moment. The euro is having its issues. I don't really believe we're going to par because, again, I don't think the Federal Reserve allows that. And that's what it really comes down to, is what does the Federal Reserve, since it is now the buyer of last resort, it's the stock buyer of last resort, it's the bond buyer of last resort, it's everything. The Federal Reserve is everything now, controls the banks. I was talking to a banker over the weekend, and they were like, oh my God, what a disaster it is. Every time you do something, the Federal Reserve talks to you about your loan to debt ratio and who you're lending money to and their loan to debt ratio. He says you can't even be a banker anymore. It's like, people don't realize that. The Federal Reserve has taken such a control over everything here in the States. And it wouldn't surprise me if he's torturing your banks too. It wouldn't surprise me at all that they pay attention to your debt. And I wouldn't be surprised that if a bank in England is doing something and wouldn't be surprised they get a phone call from the Federal Reserve saying, hey, we just looked at what the Exchequer has written down through the computer system, and your loan to the debt ratio doesn't look too good. The chairman probably picks up the phone and says, what? I'm in England. I'm not an American incorporated company. Oh, that doesn't mean anything, I'm sure the Federal Reserve says. We're watching it all. We control it all now. I mean, they are. They control the New York Stock Exchange, and they control, they control everything. They have it all. All right, so there we are. And now we're going to drift over to the cable and see what the cable's looking like. Cable's holding up pretty well. We kind of think of the 38-ish area as the real support area, but we did drift down to that 36 on that big dip. I was a little surprised we got that far down. And you can see here we're back up to the 38s, and I think the new range is in if we were defining it with a line. Let's see if we can put it up on there. Let's go to the Chicago Quant. If we're defining it with the line, I think our channel is the 143 area to the 136 area, and you can tell that, as a matter of fact, I don't think it's 136 anymore. I think it's even higher, and I think that it just got out of whack from whatever was going on at the time. Because you can see that the product has, for at least since 2021, been hanging in the 136 to the 142 area. It's got that channel, and I'd imagine there's like an inflation factor that the Fed would probably consider. You know, the amount of debt or lack of debt would consider. The GDP, it probably considers that. It probably looks, in other words, I think they've Americanized the whole planet at this point. And they say, okay, if you got this, that, you know, if you have the 5 or 6 check marks, you're fine and you should be here. And if you have that, you should be there. And they're probably looking at imports and exports, and you know, they're probably, you know, the Federal Reserve is probably looking at all kinds of wonderful stats to justify, to tell the Treasury who is manipulating and who is not. And so that's probably pretty much the way it goes nowadays. Let's see, let's jump over to what we call the dessert. Oh, let's take a look at it on Chicago. Oh, we do have it up on Chicago. Not Chicago. We do have it over on, and this is what we're talking about right there. There we go. When we widen that out a little bit, you can see it's been trapped in that range for over a year and a half. You know, so that's their new range. And you know, and it probably, and you would have to assume the range had to go up. You know, on the cable. Let me extrapolate a little bit more on that. What I'm talking about by range. The envelope or the range that they want to keep the pound against the dollar had to go up in value solely because once they broke away from the Brexit, you know, the ECB, they were allowed to trade with the Commonwealth again. Well, the Commonwealth has over 2 billion people in it. It has about a 15% better income bracket than China. So, and that's why I always say I don't understand why they're so excited about China. China, the average income over there is something like $12,000, only 1 billion people. I mean, when you have 2 billion people and the average is almost $14,000, and you're not counting the fact that you have, like, you know, Canada, you know, New Zealand, Australia, South Africa, you know, some of the industrialized nations around the world. At the same time, you know, it says a lot. Nigeria's in there. You know, they've got a lot of oil. Their income is a little bit higher than the average. You know, stuff like that. You know, you have Jamaica in there. You have a lot of different interesting countries that are relatively healthy financially. And so, you know, when I say healthy financially, they have some legitimate exports and imports going on all the time. And so, I mean, when you look at China, there's not much. They do major exports, and they do very little imports. And so, you know, I don't understand this excitement about China all the time. Just because they have 1 billion people and they generate $12,000 incomes a year doesn't mean that it's going anywhere. I mean, you know, we thought that they were going to become a free society when they said they were going to join the world economy, not just a super communist country. And that's what they've done, is moved into this position of being like a super communist country. It's like, well, that's not going to grow you. You can't grow being a communist. No, if you could grow as being a communist, you would have known the Soviet Union would still be here. You know, you would see Cuba as like the place to run to. They put their children on, you know, shark-infested waters, and they put them on inner tubes and hope that they'll float to America. I mean, obviously, this communist thing doesn't work at all. So, I mean, look at what is it? Sweden is in the middle of a civil war. The place is on fire all the time. You know, if communism worked, it wouldn't have that problem. They lost their government for like the first time, I think it was about a month ago. They just, you know, impeached or pushed out the government. First time they'd ever done it that way ever. So, I mean, you know, this communist thing is just not there. The socialist thing is not there. It doesn't seem to work. It doesn't make money. It doesn't, you know, generate really any good health. So, you know, that's why I always laugh at it all. In the end result, the United States could close its doors and just go right back to being involved in itself. And you know that the outside world would be crying to get in. It always is. And so that's the way it rolls. Anyway, that's where we're at. Now let's jump over to the Turkish lira and see what's going on there. We have been watching that. That's line, what, 17 is it? Yeah, right there, 17. We're 4 weeks in a sell. but we're 4 days in a buy. It's been showing some strength since last week. So let's see what they're doing with it today. Dollar Turkish lira. Right there. And we'll throw it up on the Chicago Quant at the same time. Let's see if it filled in. I haven't filled in yet. There it is. It's been climbing up. You can see a little inside bar going on right now. You can see the line joined in. Now let me go over to here and put it in through the Chicago Quant. Right there, you can see it's doing the same thing. That inside bar here on Chicago Quant is a down bar. It's moving down. You can see that line breaking pretty well. Same thing here, it's starting to curve. You know, this is, like I said, 4 to 6 hours behind. So the on the J4X. So you're seeing the truth. It's just slower. That's all. And then you can see here it's holding up. The weekly seems to be just stuck in neutral. That's why we thought this would be more of a dead cat bounce. It's a pretty good bounce though. Pretty good bounce. It's brought itself. It took what, 5 weeks to get down here. It was at from here, this range was at 1, 2, 3, 4, 5, 6 weeks to get down there, and in 5 days it's gotten back up to where it started from, right there. And it just shows you how thin these markets are and how much they're not going anywhere. And it's the middle of, in the northern hemisphere, it's the middle of the summer, just like it's the middle of the winter down in the southern hemisphere. So people want to do holidays, you know, get out, do things in nice warm weather. Now we'll take a look at the Turkish lira against the euro, which I find to be very insightful of the true Turkish trend. Let's see, probably because of commerce. They're probably doing much more commerce than we do with them. So you're really seeing imports and exports really, you know, meaning more. And you can see here it's been bouncing up a little behind the schedule, but not bad. And then when we go over and take a look at it on the Chicago Quant, let me put it up there first before I disturb the other chart. Right there. So you can see here, you know, it's turned up the same, and you know, overall it's not battling up to this area here like the other one did. And then we go over to Chicago Quant, and you can see here, and let's widen that out. So it didn't even get up to that area 5 weeks ago, of where, you know, it was basically on against the dollar. It's up here already, but here it's already trying to give us a volatility signal. Matter of fact, look at that. Let's widen that out more. You'll be able to see our math is even throwing it into the minus zone already. You know, it's minus. See that there? Minus 0.0030, now 31. You see how it changes there live. And so you see that little box has it in there on plot 1. And so at this point in time, it's just sitting there, but now it's minus 3.2. And, you know, just a little pressure on it. And that's what's really going on at the moment. All right. Now we drift from there. We look at the Canadian. So check out the Canadian. See what's going on there. And dollar Canadian pairs trade right there. As you can see on the fact check spreadsheet on line 20, we're 9 weeks in a buy and we're 2 days in a buy. And so the pressure has been up. You can see right there, look at that thing. That thing is curving hard on the upside there. Let's see what that's doing here. And then we're going to go over to the Chicago Quant. We'll take a look at it on that. Okay, there we are. Let's put Canada up there. And there it is, Canada. Right there. Now, we went into a sell here. Oh. We went into a sell here, you can see, for 1 day. Went into a buy 5 days ago. And see how it did that on the... Yeah, see, it did the same thing. It went into a buy back there, and it never went into the sell because this line stayed there. So that's a good reason to pay attention to the J4X there alone. It can help smooth out some of our work. And then it just jumped right back into the buy again. And there it is. It's slowly climbing back up again. And I think this might have been a red and green. I think that's what that was. That's why we don't have the line in there. I think it was a red and a green, so it was a volatility signal back then 4 days ago. and then it jumped back up again. So it never really pushed it into the sell on this chart. I think that's how it played. But then the green dot disappeared over time, and so now it's more data came in over a day or two. They backfill these things at the clearing houses and the brokerage houses, and they fill in more data. That's the way it is now in the 21st century. They don't show you all the live trades as much as that's what the law says they have to do, and then what they do is they fill them in when it goes onto their books. They clear it through their house, their clearing house, and so forth. But yeah, you can see here the Canadian is just lifting up, and the weekly doesn't seem to be really breaking down that hard. Seems like they're holding this thing, at the top end of the range. Now it's at the bottom end of the top end of the range. In other words, it's playing the top end of the time manifold there. So you can see it's just holding on. Alrighty, what else we got to look at here? From there we go over to the oil complex, which is fun today. Let's check out oil. Let's see, which one is it? We go like this. Get rid of that. And we usually look at the metals and the oils from here. So there is that. There's gold. So we already looked at that. You can see the weakness in that. And that's usually indicative or normal for, Canadian to be weak when oil or gold is going down in value. And you can see what happened to the crude oil of September. Same situation, it's been going down. And we had that one little bounce in there. We went into a sell here for this, and we were underneath the weekly, so it was a little thinner of guarantee, but it was still telling you to play the shorter term, not necessarily overnight. And then this one put you into the sell for the overnight, and then it was smack-a-doodle city from the 67s or 68s, something like that, all the way down to, what was that, 65. So it was a good couple dollar win there. Many chicken dinners. Now you can see we're flirting with the weekly buy there with the crude oil. And they're starting to reach for it again on some level. I'd imagine there's always going to be opportunity with oil. Even when we've seen it go minus, oil is always going to be in demand somewhere along the line until we come up with better technology. And so far, there's no better technology out there. So it's very hard to take any of these things pretty serious. I understand that the environmentalists just hit a new report that really hurts the environmental movement even more. The global warming stuff. They didn't include it into it was put out by the UN and so forth, and they just basically hit it and just treating it like it means nothing. Because there's no science that backs global warming. So we're going into an ice age. I keep on saying this over and over again, and it's not much more to be said about it than that. We are headed for a global ice age, not a global warming. And NASA, the National Aeronautic and Space Administration in the United States, the ones that put rockets up in the sky and all like that, their weather temperature maps reflect it all the time. And then what the global warmists do is they take the weather maps and they white out the hot, and they go, oh, look at this, the world is getting warmer. Oh no, I'm sorry, they wipe out the cold, and they go, look at this, the world is getting warmer, and they put it out there, they post it. Remember, it's legal to do that in the United States. First Amendment allows you to say anything you want, whenever you want, true or false. So, all right, from there we go take a quick look at nat gas. We're looking at the November gas. You can see it's trying to perk up here. A little strength starting to kick in. We've been in a weekly buy in this thing for so long. We're like 16 or 17 weeks now. What is that? That is line, on the fact check, it is line 10. You see that right there. We are now 17 weeks in a buy in natural gas. That's been it's been a while. It's been in the buy now since the what is this, like somewhere's around in here. Where was that? That was in the 280-ish area, something like that. And now we are in the 415, 420-ish area. High is what? 426 now, almost 427. So 426, never made to 427. There's 426.80. There's 426.50. And that's 426.60. So basically over the 424 area, let's put it that way. and it's been an interesting run from the 280 area. And probably a partial example of that global cooling that's going on. Forget about the idea of them actually following facts and figures. All right, from there we'll go over to silver real quick. We always look at the metals, and again you can see we were really, really hopeful when we got this close up in here, and I think we even had a day or two where I had a little circle, kind of like I think it was last week. We even had a little circle showing that we were piercing the weekly. Problem was we went into a sell, and at the same time it started to pierce the weekly. And we were like, well, you can't take the short term. I remember a couple people were like, we got to buy this thing. We want to buy this thing. We can't wait to buy this thing. It's like, no, you got to wait for the weekly to at least show us or give us a daily buy or something. Because we were in a daily buy from here for a couple days. And it gave it that spike there. And everybody was excited. Oh, it's going to happen. It's going to happen. Silver's going to go to like 30 or something like that. Hooray for us. And then forget about it. It's like, nah. And that thing's been in a weekly sell. What line's that? That's line... Oh, it's right above the natural gas. So line 9. We're 13 weeks in a weekly sell since the 28 and change area. And it played itself all the way down to where? 23 and change. And they're really having a hard time. As that headline on Zero Hedge says, gold is toast. I mean, the metals market is not a really good hedge for the moment. It will be one day. One day it'll have to, when the Federal Reserve doesn't want to control the metals market anymore, that's when metals will be a good product again. But right now they use it as a tool to prove there is no inflation. So if anybody has seen their gas oil, if you're outside the United States, or gasoline in the United States, double in price, or if you found that a lot of things at the grocery stores have doubled in price, just forget about it. It's not real. It's the Fed chairman refers to it as transitory. It's transitory. It's not going to last. Don't worry. Be happy, man. Exactly. All right, and then let's take a look at platinum. There's the October platinum, and you can see there it's kind of stalled out, 980. And let's just throw on the J4X. They don't have platinum on there, but let's put gold on there so we can see the difference between the two, price-wise, and see where the spread is at. And there it is right there. There is gold. You can see it's trading at that 1728 area. And we're looking, so you take 1728, you subtract it from 980, and so what you're looking at is basically 17, so that's 748. You're looking at that. The spread's come down from the 770s area. We've been a bear from the 1051 area. We've seen it fall all the way down to 474, and now we're stuck in the middle of the range, just sitting there in the middle of the range. Mrs. Yellen kind of likes platinum or something like that. She must have a lot of platinum jewelry. So she seems, when she's in power, platinum does pretty good. That's why we knew that the moment she came in, you could sell gold and buy platinum. And boy, has that been a winner chicken dinner. And even the bounce back is only 50%. So it went from 1051 down to 474, and now it's sitting in the middle of the range at basically the 740. So it's, they still can't change much of a direction there. All right, where do we go from here? From there we go to here, and that is we start looking at the other pairs trades that we watch that have more relationships with these metals even more now. So we go right off to the South African Rand. We think the Zuma situation seems to have quieted down. You see it's moving up. Oh, you can't see that. Let's fix that right there. You see the South African Rand is moving up. We'll put it on Chicago Quant there too. J4X at the same time. Right here on J4X. Where are you? Right there. Right there. You can see, the white line is moving up. It's above the yellow dashed line. Hinky Ashies are moving north. There's pressure on the upside in the product. Again, the metals are dropping. We're seeing gold almost $100 lower now in just the last week and a half. Not even. So that's the real issue going on there. And I'm just going to double check that. Yeah, because I mean, look at that. They have. Where is it? Let's just find it again. There we go. I mean, gold was trading in the 1830s, 1835 in dollar terms, on the 4th. So it's only 5 days ago that it was. You know, it's over $100 lower now. And then South African rand, you can see, is matching up to its situation there. Then we go and take a peek at, next one is, we look at the rub, the ruble. They've pushed that into a daily buy for the last couple of days. You can see it right there on line, was it that is line 18. 5 weeks in a buy and 2 days in a buy. You can see the ruble's been moving up. 3 days back, you can see it broke through the lines here. And let's see what else we can see. You can see the same thing on our chart right there. It's 3 full days in a buy, and somehow or another a red dot has appeared there. That's interesting. And you can see, we've been in a weekly buy since back in here in the, what is that? Let's just double check that. Oh, that's the South African rand still. Okay. And let's go check out the rub. No, the rub's on there. Oh, okay, the rub's on J4X, right? And let's check out the rub. I always think of like ribs. Yeah, you can see there, a couple days, 3 days. This is the 3rd day now. And what's interesting is we're falling into the weekly sell, so this could be the dead cat bounce, and maybe there's another drop coming along the line there. We'll get into a daily sell with that weekly sell developing. That could be another top. This could be like the A. This could be basically like the A right here. That whole move right there is the A. This is the B, and then maybe we've got a C that goes and challenges this low here. Goes down into the 71s again. Middle age. Deck wheat. Let's check it out. Did you see the coffee? There's a headline out there that somebody in the inside of Brazil that said that they're going to be short 10 million bags of coffee this year from the bad weather. Wow. Is that a wow or what? That's a wow. 10 million bags. All right, deck wheat. Oh, that happened. Guess what? That I actually happened to have that chart up on that page. So let's switch over to it. Right there. It's trying to get into a buy. Well, at least it was this morning. Now it's not. This is minus. Right there. That's the 9th. Let's see what is today. Let's see if we can get an update going on that thing. Let's see, what am I doing here? Settings, that's it. There we are. Let's see if it'll give us the update. There we go. That's why the line is there. We're trying to go into the buy. That's what it's trying to do. We're in the weekly buy already. I was talking with somebody at dinner last night, and they were telling me that in the central part of our state, not here in the south, it's doing fine, but in the central part, they were only yielding 35 bushels to an acre, 30 bushels to an acre, and they were shooting for like, 85 to 100 bushels to an acre. So that's really tough, See, Middle Age says, yeah, coffee is looking to resume back upwards. I saw that report and thought Robin and $3. Yeah, I know. That's what he was been talking about. That he was anticipating that the weather is so bad that he was anticipating that there's going to be major coffee shortage. So, and let's see if we can find our little ETF coffee. Where are you, you little ETF coffee? See what that does. Right there. It's after 8 o'clock our time, Eastern Standard, so we should be seeing some decent update. Oh yeah, right there, look at that. It's pushing up very firm here. We haven't been in a week. How many weeks has this thing been? Do I even have that on the fact check? I don't think I have that on the fact check. right? No. But this thing's been in a weekly buy since April. Coffee's been in a weekly buy since April. Wow. And it just missed it there. And boy, did they punish the shorts. You could tell the shorts were trying to get short, and they punished them so hard. OMG. They ripped their hearts out. Oh my goodness gracious. Yeah. That's the way you get a good rally. You got to rip the hearts out of the shorts. You know, where they go, oh my God, you know, I'm gonna get killed. That's the VIX. I just wanted to see where it was at, real quick. Oh yeah, they're gonna whack a doodle it. This could be very interesting. This coffee run could be very, very interesting. All right, now where do we drift from here? We go over to. Let's go back to. We just finished the ruble. We're gonna look at the Mexican peso now. The Mexican peso. Yeah, we've been in daily buy now for 4 full days, going on a 5th. We are been in a weekly buy for 2 weeks, going on a 3rd. So there's lots of winner chicken dinners there. Oh yeah. And peso's doing fine. Finest kind, as they would say. Richard Hooker. That was his one of his words. It's a writer, Richard Hooker. He wrote a bunch of books, and one of the things he used to like to say is finest kind. And it's doing well there. I'm getting a nice little move out of it. See how that goes. Now that we're in a weekly buy and a daily buy, it's basically guns blazing up and away in my beautiful balloon. Let's make that color correct. There it is. There's the weekly. All right, and then from there, so we did the ruble, we did the what did we do? We did the ruble, we did the South African rand, we did the Mexican peso, and we do Charlie there, the Japanese yen. There it is. Washing machine Charlie. And there's the Japanese yen, and you can see it's moving up, and you can see here the weekly is moving up. That's usually indicative of the dollar moving up. Boy, you want to see the dollar. I don't usually go into the ETFs or the indexes and look, but it's been moving up also, and it's been in a weekly buy for 2 weeks now. In this case here, it's basically saying it's been in a longer. Did that go into the sell? Yeah, it went into the sell, and it went into a buy. And is it reflecting today? Yeah, it's reflecting there. So this thing's looking hot and heavy. Yeah, we got this thing trying to move up. It seems like everywhere you go at this point, the dollar is firm against everything. Even last resort, Swissy, and its magical range that we follow. Alrighty. What's next now? See, we've done those, so now what we'll do is we'll drift over to the stock indices and see what they're doing this morning. It is the middle of the summer, so they're not exactly on fire. And there's a big vote today, too. And then tomorrow is, I think, is it CPI that comes out tomorrow? What consumer? CPI I think comes out tomorrow. So that's going to have some influence also. What was I looking for? Oh yes, the stock indices. Right there. We're going to take a short-term look of it, an intraday look, and then we'll go over to the daily charts and take a look at them. And by then, if there's no questions, well, I guess we'll be done for the day. Trying to give insight to the world about what the markets are really doing, not what the fake media wants to tell you they're doing. And so there you can see the S&P 500 up a whole 2 points. It looks like a bigger move, doesn't it? But that's all that is 2 points from here to there. It's that quiet. Then you can see here the Tech 100 on Dukascopy, or NASDAQ 100, we call that. That's up 18 points for the day. And then we can see the grand lady of them all. When I started this webinar this morning, it was minus about 18 points. Now it's plus 15 points, and that is the Dow Jones Industrial Average. Yeah. And then we'll go over to the dailies and take a look at those. Let's see, where's that? Right there. And we go right here. I'm going to take a view of them that way. And so to start off with, there is the the Tech 100. Let's show that on the J4X too at the same time. We have all these indices right on J4X also, right there. There's the where's it at? It's right there. There we are. There's the Tech 100, what we're looking at the moment, and we've been in a buy there. You can see on the fact check spreadsheet that is line 27. 9 weeks in a buy and 7 days in a buy. Yeah, right there, line 27. Right there. 9 weeks in a buy, 7 days in a buy, the NQs. Then we go over and take a look at the S&P. Oh, let's show you ours with the time manifold. See that? It's been there for a while. Then what we do is we slip over there again and take a look at the S&P 500. The world index as far as I'm concerned. And there you go. You see that's been pushing up, and over on our fact check spreadsheet you see 7 full weeks in a buy and 5 days in a buy. So it's been a winner chicken dinner again, both of them. And we'll take a look at it on the Chicago quant side of the ball. And there it is right there, right underneath it. Same situation. Seeing a little weakness. We saw weakness yesterday too. They tried to push it into the sell yesterday. It's a thin market. Don't get too excited about any weakness at this point. And then, let's see what else we got going on there. From there, we go over and we check out the Dow Jones Industrial Average futures contract. And there is that right there. You see it's trying to push itself into the sell today, even with it up. Let's just give it a Control R. Yeah, still trying. Oh no, not anymore. Look at that. The internals have moved back to the 0 line. Remove that, like so. And as you can see over on J4X, right there, Dow Jones Industrial Average. Usually this is the week where the markets could top out. This is historically, it's usually this week and next week it starts to top out. Or it creates a major bottom. It's one or the other. We've seen that happen many times over the decades. And the bull market of 1982 started on the 3rd week of August, and the crash of '87 started on the 3rd week of August, and same thing in we can pick out a couple more of those. The crash in '96, that was '97, and it was like one of the rallies, one of the bull markets of '95, I think, started off in August. They all do that. They all seem to start off in this period right around here. So we can see what's going on. When it came last year, because they had pushed it so far down in 2020, the bottom started in March of 2020. So it wasn't much of an action from there, but we have seen, when we look at my new wave signals, we have seen, I guess we could put one of those up. Let's see if I minimize that and go to, where do I go to? Do we do it there? No, you know what? Let me put that back up. And I guess I could do it right here. Let's see what we can do this. If I minimize this and minimize this and minimize that, I'll show you what I'm looking at here. Where's it at? Right there. Not that. There it is, right there. There it comes. And there is like September of 2020. There's Dec of 220. There's June of 221. Where's March? Let's take a look at SEP. See if that jumps out. See if we can spot some of that. Here it comes. It's doing spinny thing, that's for sure. Well, where are you, chart? And here it comes. It's loading up slow and steady. This is going to be interesting. There you go. You see, not many new wave signals. There's the August one. It was the bottom. Oh, there was another bottom. How about that? A new wave signal in the August of 2020. And, you know, it set up the stage for the Dow Jones Industrial Average to go from 26,000 to 29,000 over a month and a half. You know, we've seen things like that. Let's see. We look. I don't have a lot of these stored up. I should have more of them, but I used to just have them other places. We'll have to tune in one day to see that. And then I wonder if we can just push something forward. See a photograph. Add to it. No. Okay. So what we're gonna do is no. Now it's thinking. What did I do now? I didn't mean to do that. Well, let me shrink down. No, I didn't mean to do that. Let's hit an escape. There we are. All right, now let's take a look at. There's June. Let's see, what is it? March of 21. Let's see, June of 21. Let's see what that looks like. See, that'd be that. Yeah, we have already seen that, so that's no good. I'd like to see. I guess we're in 21 now, so that's what it comes down to. So you can see that. Let's just get rid of that, and then just look at what we're looking at right here. This is what it was updated yesterday or Sunday, and this is this month's contract with the new wave signals. We're getting clobbered with new wave signals. I mean, this whole market has been a massive move of new wave signals all over the place. That's not doing it. What's going on here? Where's the new wave signals? That's not it. Oh, I know what it is. Okay, that was wiped out. So let's see. What are we doing here? So that's the that's pretty much the. I know where I can go for it. We're going to get rid of this. Put this stuff back up again. And I'll show you where we can go and see what this last week looked like. Right. Let's see, where is it at? I know where it's at. It's right here. Let's see. I'll find it in a second. It's the charts. There it is. No, that's not it. It's here somewhere. Email charts, that's what it is. March picks. Not that, not that. There they are. Okay, here we go. And let's open that up. There we go. Oh, that's funny. Look where it sent it. Sent it up top. You see all these new waves that occur, slowing down. And maybe this is the top. I kind of doubt it. I don't know. We'll see. We've got a lot of noise coming up over the next 24 hours. It's going to be very interesting. They have the vote, so forth and so on. They have CPI. And then we got Jackson Hole going into next week. That's half the reason why, maybe. I don't know. Jackson Hole probably starts this stuff off. All right, this is Doc from North America. We will catch you all tomorrow. Happy trails to you until we meet again. Happy trails to you, to all our Dukascopy cyber trading friends. Aloha, traders, aloha.